In front of the beautiful backdrop of the Bavarian Alps, G7 leaders announced a new investment plan called the Partnership for Global Infrastructure, also called PGII. The goal is to invest $600 billion over the next 5 years in lower and middle-income countries around the world. The U.S. will provide $200 billion. The ambitious plan includes a $2 billion solar panel project in Angola, a $600 million project for a submarine cable system to connect Singapore and France. There's also going to be up to a $335 million investment in internet service providers and financial technology companies in Africa, Asia, and Latin America. Here's how President Biden described it.
I want to be clear. This isn't aid or charity. It's an investment that will deliver returns for everyone, including the American people and the people of all our nations.
This plan is seen as a rival to China's Belt and Road Initiative, a very similar international investment plan which has been happening for a decade and has greatly increased China's influence around the world. To discuss all this, I'm joined by Saurabh Gupta, a senior policy specialist at the Institute for China-America Studies. Saurabh, thanks for joining us.
You're most welcome. Thanks for having me on the show.
So my first question is about the soundbite from President Biden we just played. You just heard President Biden say, this is an investment, it's not charity. So how can the American people and citizens of all nations expect to see a return on their investment?
Where they can hope to expect to see a return on their investment is it's not just government money going in, that's government money trying to catalyze private investment also. Private American investment, but also private sector investment in those countries. And hopefully these investments will help these countries grow. And as these countries grow, the hope is that they stay democratic, and B, that they become bigger consumers for American goods, including for agricultural goods, where America is a very dynamic producer and exporter. But this is about helping poor people in developing countries fight their way out of poverty and get richer. And of course, there is the Belt and Road element involved out here. So there is competition with China, but there is intrinsic value in helping poor people get richer because that helps America's standing in the world too.
Now, while the Chinese Communist Party does not release exact data and numbers on their Belt and Road Initiative, analysis from Refinitiv shows the valuation of those projects is now at $4 trillion since 2013. How much influence has China gained because of the Belt and Road Initiative projects?
Well, it has gained quite a lot of influence. I wouldn't exaggerate that influence because long-term infrastructure development and infrastructure financing is not an easy game, and it has a lot of risks. And we've seen some of those risks play out in many developing countries which have been burdened with a lot of debt, infrastructure-related debt, on large projects which have very long gestation periods. So the upside of that project might be 10 or 15 years down the line, but the immediate debt burden is at this point of time. So that has been an issue which has dogged the Belt and Road Initiative. But that having been said, in much of the developing world, there is a huge paucity or lack of infrastructure financing. And therefore, it is always welcome in poor countries to place hard investment in power generation, investment in roads, and they have not been able to do that of their own accord. China has assisted them because China has been able to do infrastructure well at home, even though some of these might be above budget. And we have to remember one thing which should be fairly fair, which will resonate with an American audience, and that being, at the end, after World War II, this is a role that America had played. America had put out a lot of capital exports. America had provided technology. America had provided managerial skill. These helped fire up the economic engines of many poor countries. And then America kept its markets open so that they could export back to America. That was the cyclical pattern by which a lot of poor countries, particularly in Asia, got rich. And it's China now trying to do the same thing, provide that infrastructure, provide financing, provide that talent, managerial talent, help fire up the economic engines in these countries. And hopefully China will also become a big importer of the goods that they produce and export. And that is how prosperity is created. And therefore, I would say this is not a zero-sum competition necessarily between the US and China. There's ample space in the infrastructure development area for many parties to jump in. But I think one needs to do these projects cautiously because they can create large debt burdens and headaches down the line. And I think that is the fundamental challenge rather than was America versus China competition in this regard.
Now, there are 4 key priorities in the Partnership for Global Infrastructure: climate and energy security, digital connectivity, health and what they call health security, and gender equality and equity. We just mentioned the estimates of $4 trillion for China's Belt and Road Initiative. Is this $600 billion investment from PGII enough to even make an initial dent in the Belt and Road Initiative and China's head start on this?
Yes, I think it can make a dent in it, but the point is that 600 billion needs to come to fruition. We've had a lot of fancy projects which have been named, fancy initiatives rather, which have been named. We had Build Back Better World at the G7 last year. We've got the Blue Dot Network, which the U.S. government put out, the Trump era government had put out. The Europeans have their Global Gateway scheme. At the end of the day, none of these really panned out. There was a lot of talk, but none of the money came forward because this really requires patience, resolve, and purpose to do these over long horizons. And so if that 600 does materialize, and some of it will, because some of it is just pure grant money, it's not about catalyzing a public sector and mobilizing this one and that one. Grant money is more easily dispensed. But if those projects are done well, smartly, in particular areas like, say, that cable between France and Singapore, these obviously have enormous potential to transform economies in poor countries. But that money needs to be on the table first. I'm not sure it is going to, at the end of the day, be on the table.
Now, according to the White House, internationally, infrastructure has long been underfunded. In fact, they put the number at $40 trillion in estimated need in the developing world, and they say that need is only going to increase because of population growth and climate change. So if $40 trillion is still needed in international investment for middle and lower income countries, are we just in the infancy of these global superpowers trying to invest in these countries to try to gain influence?
Up to a point, yes. The amount of underfinancing is tremendous. It's huge. And I don't think anybody anticipates that any of the major powers, or even if all the major powers come together, that on a good day we will be anywhere close to hitting those targets. So the 40 billion is an aspirational number, and the World Bank and others have put out other numbers also, which are as gargantuan. But the idea is, again, to do good projects, do many projects, do projects which have useful local value. And yes, at some point, at some level, there is a degree of competition, because understand out here what's happening. In these, it's not just happening in the poor developing countries. There is this transition from bricks and mortar businesses to operating and succeeding in the virtual digital world. That transformation needs to happen, and that transformation is happening far slower in many developing countries, simply because they don't have the capacity to make those investments. Think of another huge transition, which is the transition to becoming more climate conscious and in renewable energy, and just in terms of green tech and green hardware. That's again a huge transformation over multiple decades, and that will require thorough supply chains which are created and recreated. And there's ample space for multiple parties to successfully enter the space. And frankly, at some levels, I think there is going to be this direct head-to-head competition. The Americans will tell say, Angola, you need to strip out Huawei from your telecommunications networks because we think that is an insecure network and we will provide a better option. And so there will be some zero-sum competition. But as I said, international development is fundamentally positive-sum. And the more players there are and the good and thought-out projects there are, I think it will be a benefit to all parties. But coming back to the basic point, 40 trillion is an aspirational number, and there's still a huge amount of space left out here over multiple decades to make these investments in these countries and back home too, frankly.
Surab Gupta, a senior policy specialist at the Institute for China-America Studies, thank you so much for joining us today. We appreciate your insight.
You're most welcome. Thank you.